Good evening, everybody. It is Sunday, the 11th of May, 2025. Hopefully, everyone up there took good care of their mothers today. So, happy Mother's Day to everyone out there. And let's jump into it. We've got a gap higher in the markets today, and we've got a lot to talk about as always. We've had this market that had that obviously the big sell-off, and we've had this continued rally that just continues to bounce higher, and it blows through every level of of interest that has the potential to become supply. So let's start here with the S&P 500 futures, the ES, and the Nasdaq. So on the left, on the left, yes, we have the S&P 500 1-hour chart. You can see we're gapping up to a new recovery high. Same is true for the Nasdaq on that 1-hour chart. And here are the 1-minute time frame. So that's the new week-to-date volume-weighted average price in green, and that shows this gap higher that we have. Currently, we are 1.23% higher in the ES and 1.6% higher in the Nasdaq. So in my weekend video on Friday, obviously, I always talk about the markets overall and where I think they're headed and where we're likely to go and what the possible risks are, more importantly, I think, than anything. So I've been cautious. That is absolutely 100% true. What I have not been is bearish. If you go back and listen to what I've been saying, so some people kind of want to hear what they want to hear, it seems. And I'm not backing away from anything. I have underperformed on the way up here, but I'm still one day, Friday, I lost a little bit of money, but I'm one day off my all time high in all of my accounts, including my crypto account. What I was talking about for the NASDAQ, for instance, is that we're at this area right here on Friday's close. We were at the 61.8% retracement of the all time high and the low this year. We had retraced 61.8% of that. We were also at this 200-day moving average, this black line right here. That's the 200-day moving average. The orange line is the anchor from the election. And guess what? We're going to gap up higher on Monday, tomorrow. And we're still in an important level. Now, I always look at this market the same way. That's what being disciplined and having an approach is all about. Is that when we're below a declining 200-day moving average, declining 50-day moving average, I look at the market and say, hey, we're getting a bounce. That's great. I want to trade that bounce. I want to give the benefit of the doubt to the buyers. And in fact, I just reviewed it because I had to look at it for something, but I was very clear to say I'm not calling a top here. I don't think we're, I'm never going to call a top. Only idiots try to call a top. And I mean that because it's blown through, as I point out over and over again. We were supposed to find supply at the 20-day moving average, at the 2-year anchor, at the anchor off the all-time high, at the 50-day moving average, at the anchor from the beginning of the year, and the 200-day moving average. But when we look at the shorter term time frame, we have been riding this rising 5-day moving average. What I outlined as a potential scenario is maybe we make a new high and then we begin a pullback. We're in an important zone where it pays to be cautious, not bearish. There's a big difference between being cautious and bearish. Bearish is, hey, I'm selling this market short. Cautious is, hey, let's ride our stops, our longs that we have, raise our stops under the most recent relevant higher lows, but being aware that we're extended and have the possibility that if we're going to reverse, this seems like a zone to do it. I've changed nothing on these charts. This is what I drew in over the weekend. This is not a prediction. This is a potential scenario to be aware of. That if we break beyond this level that everyone else has called resistance, I've called it a level of interest, but if we break beyond there and then fail, then we might see a deeper pullback. And I would welcome that. And I would love to see a pullback down, down towards 470, where we could catch the 50-day moving average, create a higher low, and then we could call this a shoulder, a head, and a shoulder, and then maybe go to new all-time highs. I'm not stuck on any one scenario. I never am. Each stock based on its own merits. If I'm trading the semiconductors, I'm going to trade the semiconductors based exactly on how I see the semiconductors. And this is a potential scenario saying that, we've run pretty far, pretty fast. Don't get bearish until we see something like this occur on the right-hand side. That's the 30-minute time frame. Until we see something like that, it's innocent till proven guilty. This prior resistance held as support. This prior resistance held as support. People seem to want to, they want a certain message when they listen to my video or somebody else's, and they project their beliefs on the market. I try to maintain as neutral as possible. And in that neutrality, not more objective than neutral, because I have the opinion that the semiconductors are an uptrend. Leave them be until they break down. Don't become bearish until they break down. This market as well has gone beyond the declining 50-day moving average. Everywhere else, you will hear people say, hey, there is resistance at this level or that level. There is never a level that you know where resistance will be found. They are potential levels. In my book, I wrote about that. Add this to your vocabulary, the word potential, when you're talking about resistance. We only know after the fact where resistance was. We can look at it and say, oh yeah, I knew it was going to, back off at that level. And so many people were trying to sell short this day because we hit the 50-day moving average. And they got the shit kicked out of them the next day on the open. Then we pulled back a little bit and then we rallied again. So listen to the market. Listen to, if you're listening to me, if you're listening to anyone on television, listen to what they're actually saying, not what you think you might hear. And I mean that as a challenge to say, go back and listen. And what do people say? I mean, I'm never going to say, hey, I'm bearish. Not while we're above a rising 5-day moving average. I'm simple. You have 100% misinterpreted if you think that's my message. But I'm also not going to say that after a rally from 170 to 225 that I'm outright bullish and I think this is a screaming buy. That is foolish. Look where we've come from. Look where we have the potential to go. And maybe we find resistance in this level, but we're just going to ride the trend. And I've been riding this trend. As I said, my accounts were at all-time highs on Thursday. I lost some ground on Friday. But the bottom line is I've made that money recently on the long side. I haven't made a ton of money, but my accounts are on average up about 7% year to date. And I'm proud of that in a market that's down. I made money on the way down. I made some money on the way up, not as much as I should, but still, that's me. I'm not here trying to tell anyone what to do. I'm trying to help you find your way and to give you education. And speaking of education, by the way, my wife put this on my desk. This is my Stocktwits award. Thank you for your votes. That's funny. That wasn't planned, but nicely done, Max. Best Educational Content Creator of 2025. And that was voted for by you. So thank you. I take a lot of pride in that because, again, I'm not trying to tell anyone what to do. I'm trying to help you find your way in the market. And what is your time frame? My time frame, I say it all the time, I'm a swing trader. I'm not an investor. I have some investments, but I don't consider myself an investor. This is what I drew in on the semiconductors. Go back a month ago. This is what I drew in. I thought we would come down to this level here, but I thought it would take a long time to do it. Instead, we came down quickly, and here we are bouncing nicely, and maybe we find supply up in here. It's still possible that this is a zone of supply, just like we saw right here. I can't tell you. I mean, I traded back here. I remember people were bullish saying the worst is over. But this happened after. And that's, we could just go like this, or we might do this. I'm going to take it one 30-minute bar at a time and see how it unfolds. And I'm going to look at this and say, here are the potential scenarios that might turn it bearish. Play a strong defense. Trade with the trend that you see, and know that risk management truly is job number one. A lot of people talk about risk management. They don't give you strategies. That's what I do every single day for Alpha Trend subscribers. So speaking of that, we're going to take a look at some stocks here that have been requested. And I always give the first look for those to the people who are subscribers to Alpha Trend. So Granny Shifting was looking at Unity Software. Now, Unity Software, let's take a look at the weekly chart to start out. Here's our weekly chart. And I just see a stock that is, I don't know, is it an uptrend or is it a downtrend? Or is it just kind of neutral right here? I don't really see anything compelling in terms of the weekly chart. On the daily time frame, the good news is we're holding above the anchor off of the low, but we're trapped below the year-to-date anchor. We've got a declining 50-day moving average. The 20-day moving average is kind of flat. Relative to the rest of the market, let's look at, for instance, the Nasdaq. Here's the anchor off of the low, and we're well above that. We're 30, 40 points above that, 8% or so. But when you look at Unity, I don't have to look at a relative strength chart to know that here we are just, 3% off of the anchor off that low. This stock is relatively weak to the low, and it's below these moving averages. I would look at this as, say, if this market reverses back down, this stock is more likely to lead to the downside than it is to lead to the upside, because maybe it comes up into this year-to-date anchor and rebuilds a little bit, then you get a bounce. But right now, it's a relatively weak stock, so it's not the type of one that is likely to lead the way higher. So it's not one that I would have very much interest in the long side. CPRX, let's take a look by itself at the daily time frame. So what do we see on this daily time frame? Let's go back to November of last year into today. So it's been trading in this range. Basically, the bigger range has been 20 to 24. So about a 20% range. This is the midpoint of that range. And what are we seeing? We're seeing a lot of volatility that's basically leading to the stock going nowhere. We had this big rally here, came down real hard to the 200-day moving average. This rally, which made a lower high, came down to the 200-day moving average. So, we have the 200-day moving average telling us there's buyers found there. But is this a compelling stock? We had a big, it's a biotech, so you've got to be very careful with this. Now, this was their earnings report, and we've got a declining 5-day moving average. I'm going to assume that you're looking at this as a long side trade, because unless you tell me you're interested in it from a short side trade, I assume that they're long. And I just see a very volatile stock, 21 to 26, back down to 21, up to 25, down to 21. And that's just in the last 2 months. So to me, it's just a stock I would look at and say, I just don't have interest. I don't like the personality of this stock. This chick is crazy. Stay away from her. I'm not interested. Move on to the next one. Hopefully, Bonanza Man, you can find something better in there that maybe you know something about the company. Take two, Sauna Trader is asking about. And this is one that came up on an earnings surprise screen I did for subscribers. And it's in a longer term uptrend. So, here's a weekly chart. We're innocent till proven guilty. On the daily time frame, as I mentioned, I think it's probably a day or two away. This is what I had mentioned as a potential scenario a couple days ago, that maybe we come down to the anchor off of this gap at the handoff. We did. We rallied up just like what I hoped we would. Now, if it gets above this level, maybe you can get involved with a stop under here. I'd still like to see another day for it to tighten up. It's bullish. I like the way it looks. So, look at what I've previously said in there, sauna, but it's setting up. It's getting ready to go. Root, here if we look at the 30-minute time frame, this is 146 and this is 134. So that's 12 points right there. And then we rallied to 144, down to 111 points. So what I see is, does the personality of this stock suit me? Look at the open the other day. We opened here at 150, ran to 157, and saw it drop all the way to 125. This stock is insane. Its average true range percentage. So the average range over the last 14 days is 8.8% intraday. And it's been just crazy volatility in here. Now, longer term, Root is looking like it's in this stage 2 uptrend. It has been since this big volume move right here. Okay, so look at the volume. If they didn't scare you out, they wore you out. We went from a stage 4 to a stage 1 to a stage 2 right here. Now that has been the primary trend for the last year and a half. We're still in that uptrend. And now the daily chart looks constructive, but after that big move, and it looks like it was on earnings, I think you want to see it settle down a little bit for a couple days before you consider to see if, hey, can it hold in this area where we have this 20 and 50-day moving average, or if it's going to break down, avoid it. But if it can tighten up the range, then maybe it could present a low risk buy opportunity somewhere over there with a stop under here or something. But I think it's too early in there, Andre. So it's one that I would stay away from. Other names here, Mike is asking about the XBI because of the drug news. And, XBI is right down to the anchor from the April 7th low. And it's the weakest group. Now, there's news that the biotechs, the drug prices are going to come down in the U.S. And I think that's what he's talking about is, what's my opinion about how this news is going to change the perception of drug stocks. First thought, most people would say, I think, would be bearish. But that bearish news has probably baked into where we see price action, meaning that, we came up to this prior band of support in the year-to-date anchor and really got hit hard this week, right down to the anchor from April 7th low. So most people, I think, would expect this to be bearish news for the drug companies. But you've got to think, is this a sell the rumor, meaning, hey, we expect this bad news to come, so let's sell the stocks now. And when the news comes, we'll cover our shorts. And is this going to rally higher? If it does, it's likely to do this. If it's going to recover, it's going to take some time and maybe do something like this. That would be the bearish scenario. Bullish scenario I could see happen. But I'm not a news trader. I don't try to, look at the news headlines and read stories of some college graduate 3 years out of journalism school and they post their opinion about it and get hung up on that. Instead, I look at it and say, let me see how price action evolves the next couple of days. Let's get some price feedback on this news before I can look at this and think, hey, now I can make some sense of it. I think it's bad news for the drug companies, so it's more likely that the biotech stocks gap up on that bad news because the market was anticipating this bad news. Most people will think, hey, it's bad news for the drug companies. It's going to open at 70. It's more likely to do the opposite of what common wisdom, common sense would tell you. So I think it's probably bullish for this group. And maybe if we can go up and hammer away at this level, we can start to see a recovery in the biotechs. These guys have been hit hard, real hard. These are the lows from 20 all the way back to 2018 that have been tested. And we still don't have a real trend in here. Even if we take a look at the anchor from the all-time high, maybe we make it up towards that 92 level, and that would be a great trade from here. So I think the bad news comes out near lows. Good news comes out at near highs. So I think this is probably bullish for the biotechs. That's what I think. That's not my trade plan at all. My trade plan is, let me see how price action starts to unfold. And I don't care if I miss. If it gaps up, everyone's going to miss it unless you bought when they looked absolutely like shit on Friday afternoon, closing near these lows. Those people who bought the dip, great. Maybe you're going to get lucky, and then it could rally up to here, pull back, make a higher low. Then I might get interested in buying over here. I wouldn't care about missing this move. You can't, that's not realistic. You can't look at that. So hopefully that helps a little bit. Fritz, who is my long lost cousin, actually, is interested in LAC and Lithium Corp. The lithium story makes sense. Those are old VWAPs. Let's do this. Let's look at an anchor off of this peak, and then maybe off of that peak, and then a handoff here. So interesting that I haven't looked at this in a while, as you can see. But look at how these handoffs worked. That's a chapter in the Anchor VWAP book. And I could put one off of this one as well if I wanted to. And we're right up against that. And this wasn't pre-planned. I didn't look at this previously. But, it looks like, again, if they haven't, let's look at it on the weekly chart. If they didn't scare you out on the way down, they hopefully wore you out if this is a longer term one. And I'm not talking about you, Fritz. I'm talking about in general. But I also have to look at it and say, where has it come from? April low was 233, and here we are at 316. So it's gone about 50%. Doesn't mean it can't continue to rally. But when we look at it and say, where does it have the potential to go before it's likely to encounter a source of supply, which might be strong enough to offer resistance. This was a prior level of resistance. We've rallied 50% and we're there now. So I'm not saying it can't continue, but it's had a great percentage rally. I'd love to see it pull back down like this and then come back up and be a buyer. This is where we were 200 days ago. That's why that black dashed line in here is starting to flatten out. So I'd love to see it pull back a little bit. I wouldn't want to chase it up here because, again, it's just rallied about 50%. So it's bound to find some profit takers. If it pulls back and does this, I would be a buyer, let's say right here with a stop under there. It starts to rally, raise your stop under there. But LAC, it's right up against the anchor from the election. That may or may not be significant. I don't know. It's just a level I have on my charts. But it's a little bit extended for a near-term buy. This is where people start thinking about locking in gains. If you're in it short-term, raise your stop up under one of these higher lows that makes sense to you. And don't let a rally like this, let's say you bought right here, don't let that turn to a loss. Play a strong defense in there. TEM, and TEM, this is a stock that, these are the same lines I had on here 2 weeks ago. And I wasn't here last Friday, by the way, because I was traveling. But anyways, the TEM, it is a schizo stock. Talk about crazy chicks. Now look at this one. This one has gone from 40 to 80, back down to 40, up to 80, down to 30, up to 90, down to 30. I mean, so you've got to be a trader in this stock. Anyone who invests in this stock and is still holding it, my God, you've got some amazing stomach that you can accept some major volatility. To me, if I owned it, let's say I bought it right here at 37 and it went to 80 and it came back to 37, I would feel like the stupidest person on the planet. And if I wrote it back up there and I felt good about myself, I don't know how I would have felt right here at 35, and I would be down from that point. So the point is, it's a crazy stock. I spoke about it to subscribers to Alpha Trends. We were looking for a little bit of a pullback and then get going. It's the average true range percent each day is it's a 10% range this stock trades in on a daily basis. So from a swing trader standpoint, if you can catch these nice moves, raise your stops up, but it's a great day trade stock. I mean, you've got 10% of opportunity. I mean, some stocks never make a 10% move in a year. This stock does it on a daily basis. So it's a little bit too difficult, Aria, to really take a look at and give you some solid advice. CHEWY's in a beautiful uptrend. Let's take a look at the weekly chart. Now, on the weekly time frame, you can see here, we've broken past the anchor. I don't know I have that anchor there. Let's put it right here. And it's broken past the anchor from the high that it made in 2021. So that's a bullish thing typically. We're above the rising 20, 31, and 42-week moving average. We've been above those for a while here. And again, it never means they can't continue. But when I look at the daily chart, I look at this and say, the stock's about to break out to a new high. Where has the stock come from? It just rallied from 30 bucks a share up to 40. So 33%. And then to break out, people often say, oh, I read in this book that was written 20 years ago that you should buy breakouts. Well, breakouts aren't what you should be buying. You have to look at it and say, and they say, well, but I lose money every time I buy a breakout, because a breakout after a stock rallied 30%, you're not new to this trend. You're not new. It's more likely that this stock breaks out at 40, maybe holds on for a day or two, then begins to pull back. And maybe it pulls back down towards that rising 20-day moving average. And then you say, how is it behaving at that 20? I want to buy it on the way back up, not on the pullback. Don't buy the dip, but on the way back up, I want to be a buyer here with a stop there. And that's not a prediction necessarily. I'm not saying I'd be waiting for a pullback to the 20-day moving average. What I'm saying is, ask yourself, where has it come from? It rallied 33%. Where does it have the potential to go before it's likely encounter a source of supply that might become resistance? Same questions I always ask for every single trade. Here we are. Does the smart money buy the breakout after a 33% rally in a month? Or does the smart money, who might have bought strength over here as it was breaking resistance with a stop under there, does the smart money say, hey, the Johnny come latelys are now in the stock. Who else is left to buy? Let's sell half of our position that we bought at 35 or at 32 or whatever, and we'll sell half of our position, but when it pulls back to the 50-day, 20-day moving average or the 50-day moving average, then we'll buy back half of what we sold. So if we bought 4 million shares here, we sell 2 million shares up there, we stick in a bid for 1 million down here. That's the way smart institutions do it. Not ARC funds or anything else like those, the money destroyers. Smart money does not mean big money. Smart money means educated money and how money flows work in the market. It is not smart money to buy a stock after on a breakout after a 33% move in a month. It doesn't mean you can't make money, because sometimes I say that and people say, Brian, you said don't buy it and it went to 45. Well, big fucking deal. Stocks do what they're not supposed to do a lot. If you're in the stock, raise your stop up on the 30-minute time frame, 15-minute time frame, underneath the higher low that makes sense for you. And if you miss a stock, you miss a stock. Or if you want to buy it on the breakout at 40, then buy it on the breakout at 40, but put your stop under this higher low right here. And maybe, maybe it does this. Maybe it breaks out, pulls back like this, and then it gets going. You say, well, that was a stupid stop, Brian. Why did you tell me that? Because it's a consistent methodology that we're looking to do. We're not looking to be perfectionist in every trade. We're looking for low risk, high probability trades. And after a stock rallies 33% in a month, a breakout is not a low risk breakout purchase. How about CCJ? And I'll look at CCJ, but I'll also look at a couple other ones. Now here, CCJ. I would have told you right here at 45, it just rallied from 35 to 45. I guarantee it. And it doesn't mean you can't make money, but the more extended we get, the more likely it is we're going to encounter some supply. This looks like an important level to me because it was prior support right in here. Support broken tends to act as resistance like it did here, and it's also getting extended. If you want to trade nuclear, why not look at something like OKLO, which has been beaten down, and this is a small modulator reactors. And here we've got this supply. We've got a shoulder here, a head, and maybe I'd love for Oklo to do this and then get going. Or SMR, small modulator reactor again, or NNE, or some of these other names. So NNE has, it's up against this prior support. It's building, breaks beyond here with a stop under there. I'd much rather buy these stocks than I would CCJ because it's just rallied from 35 to 50. So these are huge percentage moves. Hood, I'm involved in Hood. As I've mentioned on Hood, it looks a lot like Palantir. I think I mentioned in the Friday video. Palantir, right here, it got above the anchor from these highs. It held these key levels. It built this little flag, and then it took off and hit a high. It hit the high on a brand new earnings report, and then it sold off, just like it's supposed to. Buy the rumor, sell the news. And then you've got Hood, which looks almost identical. And I'm not saying it's heading for this level, but it seems possible. I've got a 1/3 position left from my purchase at 49, and I've got my stop under here right now. This is where I got stopped out of the second third right here on Friday. Was that a bad move? I don't know. The market will tell me. I don't have a crystal ball. So the other one that looks like this is GRAIL. And GRAIL is pulling back. This is what I want GRAIL to do. It looks very similar. Same type of little flag. Now, I've traded some. I've got a small position, but I've got a third left. I'm looking for it to pull back down into this zone, to be a buyer over here with a stop under there. And who knows, maybe GRAIL can be the next one to go up there. The one thing I would tell you about GRAIL, though, is the earnings are due on Tuesday. Up here, you see on all my charts, the EPS 513, that's the next earnings date. This means it's optionable. This tells me the beta of the stock, which is somewhat important. The 20-day moving average of volume is 1.2 million shares. And this is more important. This is the percent ATR each day. So this has 10.6% average true range each day. Now we're at the end of our allotted time, and I see a bunch of requests from people who are Twitter subscribers, which is $10 a month, by the way. It's a smoking deal. So I'm going to go a little bit longer to get through some of these. I'll go a little bit quicker. RBRK, it's had a big run from 50 to 80. What is that percentage wise? 60%. Where does it have the potential to go before it's likely to encounter a source of supply that might become resistance? As far as new purchase here, I wouldn't purchase it. It's holding this rising 5-day moving average. I would say if you're long the stock, protect yourself, because if it starts to do this, it could see a deeper pullback. Not a prediction. It could see a deeper pullback, and you want to lock in these beautiful gains that you've accomplished here recently. Let's take a look at that weekly chart on here. And again, it's just, breakouts after a 60%, what did I say, 50 to 80, 60% rally in 6 weeks. They typically don't continue. Doesn't mean they can't. We're interested in what's most likely, most probable, not what's occasionally possible. So if you're long the stock, continue to hold it with your stop underneath the most recent relevant high or low for your time frame. But as far as buying a breakout, I would rather sell short. I'm not going to, but I would rather sell short. I think the odds are greater that it breaks out and begins to pull back. So I wouldn't be a buyer of it. MSTR, I think you've got to look at, what's Bitcoin doing. It's in an uptrend. It's getting extended as well. So same story. New money entry up here, not for me. They're at Palantir, CPRT. I already spoke about Palantir in the weekend video. CPRT looks like it's, in an uptrend. I would say a stop goes under here. If you can find the low risk entry that makes sense for you, then continue to hold it. NET, now they reported earnings on Friday. It had a big gap up, and I think you need to let this one settle down a little bit. It got back above the year-to-date anchor, that blue line. If it were to settle down the next 3 or 4 days like this, I think this is a great candidate for trend continuation. So I would have that on my watch list, but not necessarily wanting to buy it. ARM, support broken tends to act as resistance, is the first thing I notice when I see this chart. So that support was broken, but then I look at that support and I say, okay, what's going on? Is this we made a lower high and a lower low, and then we did this. So if ARM is going to recover and make a more significant move, maybe it pulls back down into this zone, comes back up in here, be a buyer right here, with the anticipation that maybe it breaks this head and shoulders pattern, pushes up through here, then could continue to rally. But when you look at the weekly chart, this prior support with these declining moving averages tell me it's not a stock I would be very interested in buying. Where does it come from? 80? Where does it have the potential to go before it's likely to encounter a source of supply that might be strong enough to become resistance? This isn't resistance. It's a potential level of resistance because there was prior support there. Why is prior support tend to act as resistance? Because the people who have this as their price average, they're looking at saying, man, I rode that stock all the way down to 80. If I can just get back to break even, I'm going to get out. And guess what? Short sellers are looking at that going, there's probably all these dummies who are looking to get out even here. So let's put on a big offer and maybe we can scare them out of it and continue the decline. I don't think that's likely to happen. I think it's more likely that it does build an invert head and shoulders pattern, but it's not time to be a buyer of this stock right now. TSM, same story. It, kind of looks very similar to ARM. Prior support, resistance, shoulder, head, maybe shoulder, pull back down in this zone. OKTA, getting extended. Now here's a stock that's broken out. I would suspect that this is likely to start a decline, a little bit of profit taking in here. It's broken that. It's likely, again, it's ran from 90 to 120, 33%. GEV needs to settle down a little bit. If you're long, it's stuck at the 5. It's probably going to gap up Mondays. So, just play a strong defense in there. LAZR, it's just a broken stock and a downtrend. Let's take a, let's take a little bit deeper look at it. But we've got a declining 20, 50, 200-day moving average. If you look at the stock on the long-term basis, to me it doesn't look like anything has changed. We still see a pattern here of lower highs and lower lows. So I don't see anything interesting going on here. Maybe there's some kind of news. Earnings are due August 4th. There's just nothing compelling there. Anyways, that's the end of it, everybody. Thanks for tuning in. By the way, subscribers to Alpha Trends on the Twitter, we will have a special webinar this week, so be sure to tune in for that. Thank you for joining me, everybody. Hopefully it was a good use of your time, and have a good night.